Hey institutional traders, welcome to my channel. I'm your trader and trainer, Mr. Paraskol over here. So in today's video, we are going to understand a very important topic related to the smart money concepts and the price action technicals, which is going to be a game changer from now onwards. I would just ask you not to skip any part of this video because this is going to change your concepts of the technical forever, and you're going to understand the difference and the major concepts of the market structure relating to the retail market structure and the institutional market structure as well. The point of understanding and making money in the trading is not easy game, guys. It is the hardest game to make the most easiest money all over the world. To make this easy money and to also do the things in the very simple way, very important part of the trading is to understand where is the direction of the price. If the direction is upwards, you're looking for buying opportunities. If the direction is downside, you're looking for selling opportunities. You might have heard a lot of period of times that this is how we play in the markets. You need to understand the direction. You need to understand the trend of the market, and trend is your friend. But the point is how to identify who is your friend and who is not your friend. Whenever you see in the market, not all the times the direction follow the perceptions. For example, if the price is going towards the upside and you start looking for a buy opportunity, most of the times you see a reversal in the market and you see your stop loss has been taken out, right? Similarly, when the market is in the downside momentum and you start selling from over here and you see that the price actually takes out your stop loss and then finally goes to the real direction over here. So understanding the direction is not so easy as which has been portrayed in so many other social media videos. And the point is this only, that if you understand it very well, then there is no one who can beat you. But if you don't understand at all or it properly, then everyone can beat you at this game. So today we are going to understand there are majorly 3 points that you have to look in your trading education. You have to master these 3 points over here. First is the direction of the price. Okay, so that you understand whether you're looking for buying or selling. That means if you have understood the price in upward direction or the downside direction, you need to understand where you can actually transact from. So this where question is basically known as the point of interest or the area of interest, from where you have to decide that this is the price level that I am going to buy from here or I'm going to sell from here. And last but not the least is understanding where to exit in the market. So even if you define, with your own rules, with your own experience, that here is the best price I should enter, here is a good breakout that I am looking at and it is a good opportunity. But what will happen is that the price might try to get your stop loss, or you don't even know, let's say if the price goes in your direction, your favorable direction, when to get out of the market. Your profits are running and you haven't taken out the profits, and what happens is that trend reversal starts and it starts taking out your stop losses, right? So such things have to be taken care of before you start the trading with the real money, or if you're actually trying to invest big capital into this market. So today we are going to start with a very important topic, the direction over here. And to understand the direction in the market with the help of the price action itself, we are going to understand what is market structure, what is the difference between the retail market structure and the institutional market structure. And this is going to give you a very edge towards your understanding or identifying the direction of the price or the trend of the price, which will ultimately help you in deciding whether to buy or sell in the markets. Okay, guys, let's start with the market structure. Before doing that, just hit the subscribe button, guys, because I have been uploading a lot of educational videos from my side. And if you have any queries regarding the same, you can anytime contact me properly on the email or in the comment section as well. I have given my email in the description section as well, the novelasset@gmail.com. If you have any queries regarding the same, you can email me anytime. So let's start with the today's video and let's understand and complete this topic so that you don't have any misunderstanding in your brain regarding the direction of the price. So basically, market structure, or you can say this is a tool, this is a price action tool through which we understand the direction of the price. There are 3 types of direction which you might have understood in the basic, and that's why I'm revising with you, so that even if you're a beginner, you can listen it very properly. That there are 3 types of direction that will be there in the market. You can see that the price can go upside. There is another direction known as downside. So price can either go towards the upside or the price can actually go towards the downside. And last but not the least, the third type of the direction is the market is the sideways market. That means the market will consolidate and it will go something like this, and it will look like it is going towards the upside, but it is not. It is actually reversing. Then it will look like that the price is going downside, but it will reverse again. So this is a kind of the nature where we understand and identify that this is a sideways market, or also known as the consolidation. And we do not try to trade over here. When the price is in upside direction, we try to buy in the market. We try to find out the buy opportunities. And similarly, when the market is in the downside direction, we try to find as much as the selling opportunities over here. But whenever the price is in the sideways, and once identified, you will be able to control your stop losses, and you will be able to properly define and decide whether you want to enter into such kind of market or not. Sometimes even it also happens vice versa. Many a times I have seen in the lot of trading videos that people call it a sideways market, but sometimes you will see that the price is not actually sideways, it is moving in a momentum. So such kind of market, if you will look at the example over here, people will tell you that this is a kind of a consolidation that you should stay away from, but actually this is not a consolidation. You have to understand whether it is a real consolidation in the market or not. And if you're taking a buy opportunity from this level, then you're going to make profits over here. If you're taking buy opportunity over here, then you're going to make profits over here as well. So sometimes not all the market are sideways, not all the market is an uptrend. Sometimes you might have also seen something like this, the price going something like this. Okay, now many people will say that this is a kind of a buying side direction, but this is not. This is actually consolidation. So this is a kind of the thing that you have to understand, and you have to grasp it on the very advanced level before you try to jump in with your real money or the very big capital over here. Market structure is a price action tool, as I have told you in the beginning as well. Now, how to use this market structure and what is market structure? So we will start with the retail market structure, which is a very simple and which is very common knowledge, a series of higher highs and higher lows, something like this. You can say that one truth about the price, which will always remain the stable, or which will always remain the possible thing, which can never be uncertain, is that the price never moves in straight lines. You have never seen the price moving something like this or like this. Whenever you will see the price charts, I'll show you the downside example as well. You will always see the price charts going in swings in the market. If the price wanted to travel from this level to this level, the price didn't travel it in a straight line. You can see that the price actually move in swings, or the price created a series of reaction of lower highs and lower lows or something like this. So this is known as the retail market structure over here. When we try to identify the direction of the price, we are understanding how the price moves. This is the swing nature of the price, which we are discussing with the help of the market structure. Or you can say the swing nature of the price is actually determined, or the tool that portrays the swing nature of the price is known as the market structure over here. So the retail market structure is simply something like this. When the price creates a series of high highs and higher lows, something like this, this is an indication that the price is moving towards the upside. So what is happening over here? Let's zoom in and then let's understand over here. The price has started from this level and has reached to this level and have created a high. Then price will take a pullback or a sell leg in the market, which will be smaller, okay, which will be smaller than the previous one. And this will be known as the low over here. Now, from this major point over here or major support from here, you will see that the price will actually try to move towards the upside again. And this is known as what? This is known as higher high, because this new high is higher than the previous high. So this is an indication that right now the price is actually trying to take out the resistance and then follow towards the upside, creating a new higher high. And then it will again try to take a pullback known as the higher low. And then again, what will happen? The price will create another new higher high over here, another higher low over here, another higher high, which means the price is again and again taking out the resistance over here, or the buyers are actually dominating the market and not the sellers, which indicates that right now the price is in an upside direction over here, and we are only looking for buying opportunities and not for selling opportunities. Similarly, in the opposite case, where you will see another structure something like this, that the price create a series of low highs and lower lows. So this is the very pure indication that the price is doing what? The price is in actually the downside direction. So you will see that the price will create a low over here, then the price will actually take a support, will try to retrace towards the upside, but you will see that the previous high and this high, price will create a lower high over here. Then again, what will happen at this time, rather than taking out previous resistance, the price is taking out the previous support over here. That means the seller is dominant right now in the market, and the price is creating what? A new lower low, again a new lower high, a new lower low, a new lower high, and new lower low over here. So this is how the price moves in swings, and this is known as the swing nature of the price. Then whenever price wants to move towards the upside or downside, it will not move in a straight line, rather the major structure, or you will see that the price once going towards the upside will create a series of higher highs and higher lows, and once and when the trend will reverse or the trend will change, you will see the price of creating a series of lower highs and lower lows like this. Again, the price might continue towards the upside like this, and then you will see that the price will try to do something like this. So this is the series of the nature of the price, and this is not me telling you that this happens. This is the market telling you. I have opened up the gold chart today, since we have been doing last few videos on the SPY itself, and we have done the today's analysis, and I will show you my trades as well for the today that we have taken in the live market. So these are the trades in which we have taken this trade and this one with the stop loss, this again with the profit, this again with the profit, and these are the trades which we have taken with the help of the price action itself. And I'm doing nothing over here. I'm trying to understand the nature of the price over here, through which we can decode that yes, this is a good selling position over here, or this is a good buying position over here, and accordingly we can make some money out of it. Once we understand the swing nature of the market, will be able to help us to decode any kind of swings, not just this or this or this or this or this. There are n number of opportunities that are being created in the market on a regular basis. All you have to do is understand the real direction of the price. You have to look at where you want to start buying or selling from, and last but not the least, where you have to exit in the market. These are the three major points, and these are the only 3 points which you will need technically to make some money out of these markets. Okay, so what are we going to do today? We are understanding the retail market structure, and I will show you the purest examples first. As you can see, once the price wanted to start from this momentum over here, from this support level over here, till the price wanted to reach at this major high. The price, did it move in a single straight line over here? No. What did happen from here is that the price actually started moving in swings. Price created a high, price created a higher low, then again price created a higher high, price created a higher low, again price created a new higher high, again higher low, again higher high, again higher low, again higher high, again new lower low. So this is how, what I was telling you in the pictorial representation of this chart, that this is how the price moves when the price wants to move towards the upside direction. Okay, so right now we are understanding the basics, guys. We are not looking for where we want to enter and where you want to exit. As I told you, this video is totally focused on the direction aspect of the price itself, and we are going to make it strong hold on it so that you never have a confusion on this thing again. Obviously, in the next video and in the coming videos, we are going to understand where to exactly enter from the market and where to exactly exit as well. Do not forget to subscribe to the channel, guys. If you have any queries in this video or any other video, you can mention the same in the comment section, or you can email me, right? So this is a kind of example for the upside direction. Now let's find an example for the downside direction as well. Let's see over here. You can see that the price from this resistance level over here, what did happen? The price from this resistance level has started moving towards the downside till this level. And did it happen in the straight line? Did the market actually fall just from here to here in a straight line? No. What did really happen was that the price actually started creating swings. The price created a low, price created a lower high, price created another low, another lower high, another lower low, and then finally what did happen? The price started creating another higher high, higher low, another higher high, higher low, and another higher high when it wanted to move towards the upside. By understanding this kind of consortium, you are not just going to understand where is the direction of the prices, rather you are going to understand when the price is actually reversing as well. Because if you have understood this topic by now, that the price moves in swings and the price creates a series of higher highs and higher lows when the price wants to move upside, then there is also an identification mark where we understand that now the trend is reversing and the trend is not going to move towards the upside. So what the price will try to do from this level is, rather creating another series of higher high and higher low, price will actually do this. Price will create a lower high, price will create a lower low over here, a lower high, lower low, and the price will try to continue this major framework till the time the price wants to continue towards an upside. So it might happen something like this as well. The price might continue something like this, and then again the price will try to change its direction exactly from this level. What will happen is that the price, rather than creating next new lower lows and lower highs, the price will create higher high, higher low, higher high, higher low, and then another higher high. So this is how the market gives you a very clear idea where the market is moving, where the direction of the price is. And once you have the stronghold on this topic, it will never be impossible for you to make money in this market. I know that the percentages of the success level are very less, guys, and if you have not understood by it and not accepted by it, and you think that you have some kind of supernatural power and then you will be able to make general profits like any other people, this is not so the truth. I have trained more than now 10,000 traders and I've seen them. Not everyone has been successful in the market. Not everyone has failed in the market as well. But the consistent ones, but the learned ones, and the most strong-headed ones are the ones that I have seen making money. This is one of the qualities that I have to develop in myself, guys. It's not like I was a born trader. There was nothing such like that. Okay, I didn't even have capital for trading myself. I didn't have any kind of knowledge. But with the stronghold of the concepts, once you want to, learn and earn, once you want to learn and reach the level of that sincerity, that nothing can beat you. And these are the concepts that we are discussing in such videos, where you have to understand these things matter. What we are trying to understand over here, and how I make money on the regular basis. And no doubt it might sound very simple. No doubt it might sound very not authentic, but I'm telling you the things that are working and that are giving me money and that giving any other trader money are such concepts only. So rather than just ignoring or rather than half learning such concepts, just looking at some videos and then you try to trade in the real money and then you lose some and then you come back to, learning some videos again, and then you now have new confidence, you have new concepts, you think you have new tools. The search is indefinite. You're never going to find that holy grail. The holy grail is that you have to use that one concept again and again, again and again, again and again. Okay, just like Bruce Lee said that I do not fear the person who have practiced 10,000 types of kicks. I fear the person that has practiced one kick 10,000 times. So till the time you're not profitable in this market and you are really finding your edge, and I'm telling you, use these concepts, guys. You can see my live analysis on our channel as well. You can see that I have been using the same concepts over here and we have been able to predict the direction of the price very well. No doubt there will be stop losses. You cannot underestimate the power of the stop loss as well, because they're imminent part of your future. And if you think that losing money is not something that I cannot do, don't enter enter into this market. You're going to have n number of stop losses, but whenever you're going to make some profits, you're going to make so many or so much profits that they're going to recover your stop losses as well, and as well as give you some extra money. Okay, and this is the major journey that you have to go through to make money in the market. Coming back to the topic, now you have understood the buying direction over here. The buying direction is something like this: identification of higher highs and higher lows. Similarly, when the price changes direction or the want to move towards the downside, the price will create a series of low highs and lower lows like this. And again, when the price wants to reverse itself and wants to create towards the upside, you will see some action like this. It will create another higher highs and higher lows. Now comes the last but not the least, very important third part of the market, known as the sideways. So let's see where I have written the data. Okay, so as we discussed, that in this video we are going to discuss the retail market structure. So we have discussed the two major concepts. First is the upside, how the price looks in the upside, how the price looks in the downside market. Now we are going to understand how the price looks at the sideways market. So if there is a sideways market over here, how are we going to identify whether the market is in a consolidation phase, and how I can save my stop losses and not enter into such sideways market so that I do not lose money again and again? Because when the market is sideways or when the market is consolidating, you will actually lose money again and again. And I will show you the live example. This happened, yesterday itself. Okay, I'll show you over here. The market was very highly consolidating yesterday. You can see this is the yesterday's chart over here, 8th of July, when you will see this was the pure consolidation, and this is the best example. And literally I have hit around 2 stop losses here as well, and last one was profited over here somewhere, which was very small risk reward. So the whole day was negative itself. It was not at all positive. If you will look over here, this is a kind of sideways market that's look like. Now if you will remember the upside market, which is a series of higher highs and higher lows, look at this price structure, look at this major day over here, and you will see you are not able to identify such structure over here. Similarly, when I say that the price moves in a lower highs and lower lows, you will see that there is no structure over here, something like this as well. What is happening over here is, look at the series of the data, how the price is actually making. So this is how the market starts. This is the opening candle over here. Market created higher low, higher high, and then lower low. Okay, and then what did happen? The price created something like this, again lower high, lower low, again new higher high, something like this, and then new higher low, new lower high, higher low, higher high, higher low, lower high, lower low, lower high, lower low, and lower high, and lower low, and lower high, and lower low. So you will see whenever the price creates a series of higher highs or lower lows, something like this, then this is known as the consolidation. So normally when the price is upside, the Venn diagram data set or the subset actually says that the price should do something like this: higher high, higher low. This is the data set that you should be looking at. Whenever the price is downside, you should be looking at lower low and lower high. But whenever the price will be in the sideways direction, you will always see price creating higher highs, lower lows, or the second data set, which is lower highs and higher lows. If these two and these two are there, that means the price is creating a series of consolidation. If this is happening, that means this is a selling remark or selling identification. If this is happening, this is a buying remark. So over here, if you will look at the live example over here, the price created a higher high, price created a lower low. So this last point was higher high. And what was expected if the price is creating a higher high? Price is expected to create a higher low and then new higher high. But that didn't happen. Rather, the price actually created, the next stance was created over here, which is the lower low over here. Now, what did happen again? The price created a new lower high. And then from here, the price created a new lower low. And from here, what was expected? The price created a lower high, which it did. And from here, what did happen? The price was expected to go downside and should give us profit from here, because I was actually selling from this level. This was the first identification mark. Look at this chart, how I light traded as well. So you will have another kind of clarity in the markets. So over here, what did happen? As soon as the price created this lower low, price created this lower high, I tried to sell my first level from here, and the price created a lower low. Again, the price created a lower high, and the expected was that the price will go towards the downside. So we again started selling from this point, and we targeted this level. That means the price actually never met the target. What did happen? The price actually reversed from here after creating a lower low, a lower high. The expected thing was the price will create a lower low. And what did happen? The price created a higher low. And then price did what? Price created a new higher high from here. And then higher low. And then higher high. Once the price starts again towards the structure, I started buying from here again. And I put my stop loss over here, and we targeted for 1:3. That didn't happen. Rather, what happened? Price again created a lower low over here. Okay, so this is a new lower low which the price has created. When you are trading in the markets, you never know when the consolidation will start or when will the consolidation will end. While in these markets, I never try to trade in the sideways. That means if there is a subset of higher high and then lower low, then there will be no trade in between, no trade in this swing unless the price creates a new lower high and then new lower low, and again new lower high, and then the price was expected to create a new lower low, but that didn't happen. So this is how the consolidation actually takes away your stop losses, because you can never identify when the consolidation is actually happening and when it will end. So over here, I'll show you how I made money. The last market was like this. This is a new higher high the price created, and then the price created a new lower low. This means that even in the second half of the market, normally when the price starts moving towards upside or downside, it was again consolidating. So from here, the price was expected to create a lower high and then lower low. Since from here we identified that the market is in sideways momentum, I never sold from here. I never expected the price will go downside from here. What did happen was I was actually right that the price will try to consolidate and will try to create a new higher low, a new higher high, a new higher low, a new higher high, and then lower low. Okay, and then lower high, and then lower low. And then once it was definite, because these were four subsets over here. This was new low, this was high, this was new lower low, and this is new lower high, and this is new lower low. Now I have four data points which is confirming me lower high, lower low, lower high, lower low, that the price might continue. So I started selling from this level again when the price created a new lower high, and then a small target was there because the market was about to end and we know that the price has been consolidating. So a 1:1 risk reward was taken from here. This was the last hit that has been taken from here, which gained us 1% in the market. But this happens, guys, and this will happen to you on a regular basis. Today the market was very clear. The market wanted to move towards the downside, started selling over here. Once the price started creating a series of higher highs and higher lows, you can see that one of the trade is running as well right now. So over here, what did happen? The price started creating a series of higher high, higher low, a higher high, higher low, higher high, higher low, higher high, higher low, higher high again, and then new higher low, a new higher high, a new higher low, a new higher high. Now, if you will look over here with the naked eye, you will see that the price is not moving anywhere, or this is a kind of consolidation, but actually this is not, because the structure is very much clear over here. It seems like the candles are very closed and very small, but actually this is a pure price action, because the price is creating the series which it wanted to create, something like this, like this, like this, and this and this. And if you will look at my trades as well, whenever the price has created a new higher low, let's say like this, the price created a higher high, a higher low, a higher high. This is your entry point. This is where you should enter towards the upside. Again, as soon as the price created a higher low, again a price created a higher high, we started entering from here. And that's what you can look from the trades as well. So I'll show you the drawings now, and you can see that my trades exactly look like the same. Using the simple price action, guys, you don't need to be very advanced kind of algos or a lot of tools or a lot of screens to understand and make money out of it. The price is here. Price is not going anywhere, and the price is actually telling you where to buy and where to sell. All you have to do is understand and do it religiously. You have to do it consistently again and again and repeat the same process. Sometimes it will take your stop losses as well. Like I showed you the last year as well, it was a huge consolidation. And no matter if I sold from here, again, when I started selling from here, from the lower high and lower low, price never met my target over here. What did happen? The price reversed from in between. It showed me that I have made some good money till over here, and rather than hitting the target, the price actually hit my stop loss. And this is kind of a psychological thing that will happen to you as well. You know, your position will be going in your favor, and then suddenly what will happen, the spike will come against your direction and you will hit your stop loss rather than hitting your target. That's why these concepts are very imminent for you to make money, guys. And I'm telling you, you will see a lot of results changing over here, because you will understand the power that something which is so easy, which is so elegant, but the point is your psychology might not be right enough. Your psychology might not be allowing yourself to be consistent and disciplined enough that you can do it again and again, even after hitting a stop losses. And I'm telling you, there will be times there will be streak of stop losses as well, and there will be times there will be streak of profits as well. I made this 1:9, had a small stop loss over here, I had a profit streak over here, again over here. Okay, so this is a very simple thing that you can use on a daily basis and you can make money out of it. No doubt there will be consolidation, there will be stop losses. There is no point in saying there will be no stop losses. Every strategy has stop losses, and that's why risk management is God. And look at this day. Okay, again, you will see price creating new lower high, lower low. First created lower high over here, new lower low from here, again lower high, again lower low, again lower high, lower low. First time price created a simple higher high from here, but again, what did happen? The price consolidated and went towards the downside. And this is one thing that we are going to understand in the institutional price action, the trap nature of the price. These are some entries in which you are actually going to get returns of 1:10 as well, because the stop loss were around 21 cents only. So these are the things that you will be doing in the institutional market structure. The second phase of the next video, we are going to discuss what is the institutional market structure, because sometimes the price will try to teach you something like this, that after creating a new lower low over here like this, and then the price will try to create a new higher high, and there are chances that it will reverse and will continue the direction. So what are those chances and how often they will happen and how can I make money out of it? And that's what we are going to understand in the coming videos as well. That's why I'm telling you guys, subscribe. Literally, if you have any queries, you're most welcome to have a one-to-one session with me. If you're stuck somewhere and if you're not profitable and you have not found your edge till now, just use simple things, just use simple tools. You're going to make money most of the days, and some of the days you're going to lose money, except both parties. Okay, except the package, the upside and the downside. This is the whole video, guys. If you really want to get it done, I would suggest you to watch this video one more time and do some homework. Use the SPY chart, use the NAS 100, you can use the QQQ, anything, and you will see the same thing happening again and again. Whenever the price wants to move towards the upside, now you can see the structure over here very simply with the naked eye, that you can simply see that the price is creating a series of higher highs and higher lows, higher high, higher low, higher high, higher low, higher high, higher low. Sometimes it might confuse you. Sometimes you're not able to do it because the practice is not well till now, but it's okay. With time and practice, you're going to get master in it. And that's what your end goal should be. The end goal in this trading process is not money, but it is about having mastery in one setup that you can trade n number of times without hesitation and without losing your confidence on the stop losses. Okay, guys, till then, see you. We have covered the retail market structure. In the next video, we are going to understand the institutional market structure as well. So stay connected. Till then, sayonara. Hasta la vista.